want to go to this insane video I saw from Ian Carroll because, and you're probably someone who's like me, right? Where you've seen the GameStop stonks, you've seen the apes and the apes go strong, apes to the moon. And you're probably like, what is all in this about? Or you probably don't understand like what the mechanisms are. What are these people really doing? Why are they like, why was it such a stick to like the establishment?
Anyone defending institutional Wall Street right now got an envelope with photos of themselves at Jeffrey Epstein's birthday.
How did these hedge funds collapse? So Ian Carroll put together a 10-minute video because he responded to Matt Baker, because Matt Baker had the same question essentially I did, which is, I'm seeing pieces of this, but I'm not understanding the big picture about GameStop. Like, why is this a huge thing? Who is this rolling kitty guy? Why does any of this matter? Ian Carroll put together this 10-minute video that explains this incredibly well, and we're going to watch it in its entirety because I think everybody needs to see this to have an understanding of just how fragile our financial market system is, and just to show you what a sham the majority of the American system is. So I'll go to this. And again, this is Ian Carroll, right? This is somebody who is in the InfoWars wing, someone who's like in the anti-Israel wing, who is sitting there. He's in the canceled group, right? He's normally thrown around with like the Jake Shields and Nick Fuentes, the Tate brothers. He's in that crowd of people who is heavily censored, but they're dominant on X. So this is his response here. So Ian Carroll, and he's responding again. So this is Matt Baker, right? So Matt Baker is somebody who's in the political arena as well as a commentary. I don't know too much about him, so forgive me. But he says, I got you, homie. Here's an explanation of the actual market-wide criminal conspiracy that GameStop exposed, and how and why short sellers could actually blow up the entire global economy. Cameos by Blockbuster and Toys R Us, no exaggeration. So I'm going to go with this from the beginning. Again, if the volume is too high or too low, please let me know. I will adjust it accordingly. I am watching, so as long as it's in the yellow, I'm not going to bump it, but if I see it in the red, I'll obviously dump it down a little bit. But let's watch.
So this homie said, I can't believe this GameStop thing is still going on. Can someone explain it to me? I love Ian and everything he stands for, but I literally have no idea what this is about or how one stock could have any real effect on impacting ultra wealthy people. I'm down to help. I just need to understand what's going on. I got you, Matt. I'm gonna try to put it all into one video right now. I've made lots of videos about pieces of this, but I'm gonna try to like actually explain the real thesis of what's going on and why GameStop very well could affect the entire market, bring down corrupt financial institutions on a big scale. But yeah, I gotta put my hair up for this one. Okay, don't get scared of charts. We're gonna keep it real.
When I put my hair up like that, I also just look just like that different, like a naked mole rat. He has a little bit more hair on his head than I do, I can't lie.
Really simple. When you buy stocks normally, you're buying at a lower price and you're hoping it goes up so you can sell it and make some money, right? Well, there's no rule in the stock market that says you're not allowed to like borrow something from someone, right? So you're allowed to borrow shares from your homie. And if you borrow something, you're allowed to do what you want with it, right? Like I can borrow some shares and then sell them on the market right now. I just have to return them later to make sure that homie gets his shares back, right? So you're allowed to do this thing called short selling, where you borrow some shares from whoever right now, and you sell them at the market right now, hoping actually the price will go down. And then later you'll buy some and return them to your homie. And you actually make money because you return them for less money than you actually made when you sold them in the first place. So short selling is this thing where you can bet the market will go down, and it's like taking out a loan, and when the market goes down, then you close out the loan and you make some money. You have to pay a little interest to keep that loan open, but you can make a lot of money doing that. Especially if you see a company that's like obviously gonna die because it's a failing business model and you wanna make some money while it dies. But you'd wanna be really careful, because if you have all these loans open and you're paying interest to keep your loans open, you're hoping the price goes down, but then it starts to go up a lot, you could lose a lot of money because you'd have to.
And they did lose a bunch of money. Now, if you remember, the GameStop phenomenon happened, this is about a couple years ago. There were numerous hedge funds. I believe there was one large one in particular that completely bottomed out, and then I believe had to declare bankruptcy and a few other issues that, in the financial market, because they have obviously owe a bunch of money to people who put money into it. And that's what happened to them. They had a huge amount of options into short selling GameStop, which meant that they had, you know, these sell options at like whatever the price was. I think it was like $9 at then. But now they had to go back in and buy all of those shares they short sold at that $9 mark, meaning every single one of those shares that were sitting at like $63 or when it went up to like the $100, meaning they're buying like 100, they had to buy 100 times back at the rate in which they had. And so at a certain point they panicked out because the number was rising so much that they just were like, we have to eat this enormous loss. And they did. And then boom, you know, next thing you know, like a $1.2 billion hedge fund just instantly gets crumpled. And it's because they were playing these stupid games on the market like this. But let's continue because he explains it a bit better than I can.
To buy them all back at a higher price to pay back your loan, and you had to pay interest to keep your loan open. And prices can go up infinitely, theoretically. So short selling is pretty dangerous, and everyone knows that. And back in the 90s, all these rich people like at Bain Capital, like Mitt Romney, they realized that they can actually take companies down from the inside and basically loot a company from the inside, take all its money, give it to them and their buddies, the shareholders, and then bankrupt it and leave. And there's not really any consequences. You just buy into the company, buy a bunch of shares, get yourself on the board, take it over, start hiring people that'll do what you want, mismanage it, do a bunch of buybacks so the money gets paid back out to you and the shareholder buddies. And you can really just mismanage the company into the ground and basically loot it for all it's worth. And when it goes bankrupt, it's like, oh, well, whoopsies, it was destined to fail. We'll just move on to the next company, whatever.
And imagine there's probably people who will watch this who have probably worked in a corporate environment, whether it's accounting or some larger firm, and have had this exact thing happen where all of a sudden there's a buyout. You know, this middle manager comes over, it's this new guy, he comes in and he's literally like, he walks in and he's like, yep, have a good one. You know, flips a cigarette out and he smacks the secretary on the behind as he walks to the door. He's like, all right, man, we're running it now. And and the next thing you know, the company starts diving into the ground. It's probably because he was involved or invested on the back end of one of these schemes meant to haul the company from the inside out while they scalp money out. Quite literally, Tim's allegory of people stealing silver spoons off the Titanic as it sinks.
My mistake. And they made billions of dollars doing this to Toys R Us. And everyone else was looking around like, damn, that was a pretty solid strategy, Bain Capital. Maybe we could do that to some other companies. And this was just after the .com bubble happened. And so there was this whole internet thing. Amazon was on the rise. And everyone kind of realized, like, you know, there's all these retail stores out there that are probably in big trouble, like Blockbuster and Sears and GameStop, you know, companies that are bound to fail. So why don't we make them fail faster and profit off of that? Plus, it turns out that these dudes that work at places like Bain Capital that can take these places down from the inside out, turns out they have a lot of friends in the market that like to short sell. And the thing about supply and demand is when I'm borrowing like thousands and thousands and thousands of shares and selling them into the market right now, all that selling actually makes the price of the stock go down, because like when everyone's selling something, it gets valued less. But when everyone wants to buy something, the value goes up, right? So short selling actually makes a stock's price go down. And these guys realize that, like, you know, you like to make money when stocks go down, and I like to make money when companies get destroyed. And when we do those both at the same time, everybody wins.
And it's a double-edged sword. So not only when they get together and they can group up with these with the large hedge funds and they get a lot of people's money all sorted together and they all do the short selling all at once, it drives the price down. Vice versa, though, what happened with GameStop was when these companies start panicking and they think that like they have to cut their losses at a certain point. When they buy back all of their shares, it inversely rises the price. So when all these hedge funds started scrambling to get their shares back to cut their losses to stop the bleeding, they were also driving the price up because they're mass buying GameStop stock again because they had to come back on their loans. Kind of crazy, right?
Except the company, of course. And then it turned out they were like, hey, we both know a lot of people in the mainstream media that like to report on failing companies. You know, the kinds of reports that make investors scared and make them want to sell a stock. And they realized they kind of had the dream team for bankrupting companies, and they could all make money on the way down and no one would ever stop them because it's kind of legal. And it actually started to work so well that they started to get really greedy and they started to naked short sell, which means like no one's checking if we're even borrowing these shares that we're borrowing in order to short sell. So why even borrow them? We can just short sell shares and say we borrowed them, and the company's going to go bankrupt anyways. And when it does go bankrupt, we don't even need to pay that loan back because there's no shares to give back. They're gone. And fun fact, it's all tax-free money too, because there's no company the shares are gone. Free money. So some of them got really greedy and started selling without even borrowing the shares in the first place. But we'll come back to that in just a second. Because the other thing that's important to realize about the stock market is it's like this big casino game now. So it's not like the big boys aren't just playing with like a share of a company. They're playing with these things that are called derivatives, which is like leveraging your assets to take out loans to like make big plays, big gambles. So they use all these special kinds of contracts where like they put up collateral in order for their bank or whoever to let them trade on a whole bunch of extra money they don't really have, but they've got collateral. So if it starts to go sideways, the bank can just take their collateral and it's all safe. But like this way, I can trade with 100 times the money of what I actually have.
It's kind of insane to think that you can do so much without having really any money. And that's becoming the root of like what this entire financial situation is. Yeah, this is a phenomenal breakdown, dude. When I had saw this video, I was like, I'm going to have to react to this. It's insane. And it keeps going. And what's insane is once you get to these numbers up here to see how much money truly is in these derivatives between the collateral and how much the banks are being leveraged against, it's going to blow your mind.
Leverage. And all these different tricks, they're called derivatives. And they let these big players gamble with huge positions in the market. And so this now, when the stock moves by $1, they're leveraged 100x. And so if the stock goes up by $1, they can make like 100x $1. Or if the stock goes down, vice versa. And this derivatives market has gotten really big, like hundreds of trillions of dollars worth of these weird bets just all over the market. These are the top banks. It's like JP Morgan, Goldman Sachs, their names are over there. And this is in millions of dollars. So we're talking $49 million. That is $49 trillion worth of these derivative bets.
So think about that. So JP Morgan alone in derivative bets, one bank institution by itself, has more in these derivatives than the entire United States is in debt in trillions of dollars, right? Because the United States is in debt by like around $34 trillion. But JP Morgan has about $50 trillion in these derivatives inside the financial institution. Wild, dude. Absolutely wild. And it makes the money seem not even real when you get to these almost unfeasible figures.
Open with just JP Morgan, the biggest bank. But the thing about these derivatives is they all have collateral backing them up, right? And the thing they use for collateral, they're not like you and me. It's not like they're putting up their car for collateral. They're putting up their other assets. So over here, they're going to be trading these assets on that collateral. And over here, they're trading the collateral on these assets. And so the whole market is now tied together by all these big financial institutions trading trillions of dollars worth of stocks that they don't actually have on leverage that's based on collateral that they're trading for trillions of dollars worth of stock over there. You see what I mean? So like if they fuck this one up, then that one gets fucked. There's all these dudes doing this like kind of criminal shorting businesses out of existence scheme in the market, kind of in secret. And they've been targeting GameStop for years now. Ever since 2014, the stock was on this endless ramp down. They were short selling it while they had infiltrated it and were mismanaging the company from the inside out. Amazon was licking its lips, ready to take over the video game online industry. And the people doing all this short selling also have all these other crazy bets open all over the market. And if any of them go wrong, a whole lot of things go wrong. And then out of nowhere, this random dude that would like live stream to 4 people about his investment thesis
like me
noticed that GameStop had a lot of short sellers and it wasn't necessarily a bad company. In fact, it had a future if it turned around. And then this really savvy businessman came and took over the company and started turning it around. And he kicked out all the bad people that had been trying to mismanage it to death. And suddenly all the people that had just spent years and years short selling millions and millions of shares, and all those loans were still open because they were expecting it to go to zero and they wouldn't have to pay them back. Suddenly the price is going up and they're all in trouble. Because the thing is, when the price goes up and one of the other people that's short selling the company gets scared and closes out their trades, they have to buy all those shares back to get out of that, right? Because they borrowed and sold, so now I have to buy and give them back. But all that buying makes the price go up even higher. And there were a lot of people short selling this thing. And in fact, they had short sold it so much that they couldn't afford to buy it all back once the price started going up that high. I mean, it was down to like 50 cents. And they were opening short sales at 50 cents. Today we're at what, $60 times millions and millions and millions of shares that you have to buy back?
Like, that is like an incredible, that's like an 120 times, a 1,200 times loss for all of these companies. And to think that it's all fake. It's all just fake, non-existent, poof, fairy tale, not real. Just, it's imaginary dollars in a bank with imaginary loans, with imaginary collateral that's being linked to all these things that don't actually exist, but the numbers on the paper look good. Incredible, dude. Incredible.
Each one will make the price go up, and the whole stock market is tied together by all these crazy financial derivatives, and everyone's balance sheets are actually kind of sketchy in the first place. Yeah, and we all realize that all we have to do is buy the shares and just hold on to them, because these guys need to buy them from us in order to close their trades out. Whoopsies. And the more we thought about it, the more we realized, no, I don't really want to sell. Fuck you. So then they tried to trick us into thinking that they had already closed their positions and it was all over. And we were like, I'm pretty sure you're lying, dude. So we just held on for years. And it turns out we were right. Shorts never closed. And now we've all got the shares that they need in order to close. And I still don't want to sell. Fuck you.
That is a beautiful breakdown of that situation. So now, if to make a little bit more sense of apes hold strong, or never sell or never give up, and if you want to understand what their mission is and what they were doing to try to achieve with that, the first time I watched this, it was like, it was shocking for one, right? But again, like, as I thought about it, I was like, it's really not that shocking, because what isn't fake in America 2024, right? What isn't some kind of astroturfed, inorganic, artificial creation that may be AI generated? It's all a facade.